Hi! At the start of the autumn session on September 1st, we are ready to present a summary recap of the commodities market. Let's start with the oil market. Oil was gaining ground throughout the summer, while in June it was gathering momentum and trading mainly in the sideways channel. In the next 2 months, the upside movement gained traction. As a result, the instrument added 22% in the previous session. At the moment, the quotes are steadily moving towards $88 per barrel and are set to test this level very soon. Despite fears of a slowdown in the Chinese economy and a possible recession in Germany, demand for oil remains relatively stable. At least it shows no signs of decreasing. What's more, today's news signaling that China's manufacturing activity slowed less than expected inspires some optimism. At the same time, there are growing expectations of tightening supply in the oil market. Besides, the heating season is coming, meaning that oil countries of the northern hemisphere will need to ensure they have sufficient fuel supplies. So, the price of $88 per barrel seems like a very attainable target. It's very likely that after reaching this target, albeit with some pullbacks on the way, the quote will hit towards $90 per barrel. Now let's discuss what happened in the gold market this summer. In late August, the precious metal eased somewhat and was trading in the range between $1,940 and $1,950 per troy ounce. After a sharp drop to the level of $1,880, gold made a strong rebound, offsetting fears of a deeper decline. To continue the uptrend, the quote needs to settle above the level $1,950 per troy ounce. Otherwise, gold may form an extended pullback. The main reason pushing the price of gold down is the continued tightening of the monetary policy of major central banks. Just recently, the head officials of the US Federal Reserve and the European Central Bank have confirmed the hawkish stance on interest rates. So the current gold value is unstable, as it may start to decline at any moment and slide below the threshold of $1,900 per troy ounce. Unfortunately, the Russian ruble was among those who showed the worst performance this summer. Although the US dollar seems to have stabilized in the range of 94 to 96 against the ruble, we are still talking about a gradual weakening of the Russian currency. Apparently, all attempts of the Russian government to stabilize the ruble in the forex market were in vain. The conclusion is simple: the Bank of Russia will continue to take steps to improve the situation. Therefore, the regulator is set to raise the rate further, although this measure does not seem to be helping the ruble. Many traders are afraid of a further depreciation of the ruble prompt a deeper decline in the Russian currency. Nobody wants to hold a currency that is depreciating at a rapid pace. That's why traders are turning to other assets, and the ruble is falling, being trapped in a downward channel. So, the central bank will have to do its best to make a positive shift. It seems that only the Ministry of Finance can change the situation by selling its foreign currency reserves, but this scenario seems highly unlikely. On the other hand, the Russian stock market displays a surprising resilience. Despite a weak ruble and high interest rates, the stock index returned to the value of 3,200 points. Continued monetary tightening is sure to weigh on the stock market in the near future, but for now, indexes are trading at the local highs. In the medium term, the index may fall below the level of 3,000. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.